Hello and welcome back to Moneycontrol's live stream. You're watching Closing Bell with me, Lovisha, Darad. And it looks like it's once again a dull day for the markets, given that bears have tightened their grip. And now you can see that Nifty has even breached that 26,200 mark as of now itself. But yes, Sensex meanwhile, that has slipped nearly 500 points itself. And even broad end of the markets, which was showcasing some bit of a participation even till yesterday, has succumbed to the selling pressure. If you look at both Nifty mid-cap and small-cap index, both of the Nifty mid-cap and small-cap index has turned quite negative, and particularly for Nifty mid-cap index, which has slipped nearly 2% as of now itself. But yes, three major factors that has contributed to the Nifty's decline. First, it's the weekly expiry of the Nifty derivative contracts, so price swings are imminent in today's trading session. Second, the geopolitical tensions on the west is keeping the market quite nervous, because if you look at India VIX, that has risen by about 10% in the past 3 days. Even today, you can look at India VIX elevated by about 1% itself. But yes, the third factor here remains to be is that HDFC Bank, which is one of the major banking heavyweight, continues to sulk on the back of its high LDR ratio, that is your loan to deposit ratio, which has come in its third quarter business update. So yes, all of these three factors contributing to today's weakness, and yes, the broad-based sell-off which has been present in the markets. But yes, sector-wise, if you take a look, metal sector, which was running for the fifth consecutive trading session, did see some bit of a breather, but it is trading marginally higher as of now. But then we have pharma stocks, which has done quite well today, nearly 1% gains coming in for the Nifty Pharma Index, with Divi's Lab leading the gains on the back of a positive brokerage note that came in by Citi itself. But other than that, IT stocks also, Nifty IT Index up by about 0.5%, reviving today after a day's loss that was seen in yesterday's trading session. Now let's take a quick check of how the top gainers and losers look like on the Nifty 50 front. If you look at the top gainers on the Nifty 50, Apollo Hospitals has been doing quite well after yesterday's loss, with about 3% gains coming in for this hospital major. ICICI Bank up also for the third consecutive day, and HDFC Life up for the fifth consecutive day. Tata Consumer, Bajaj Auto on the back of its MK's upgrade also doing well with about nearly 2% gains. However, on the flip side, what did not do well and what has not been doing well in the Nifty 50 front, you can take a look. Trent, one of the biggest accidents of today, we're seeing a sharp fall of about nearly 9% itself. We did see that in its third quarter business update, the revenue growth has stayed quite flat on a sequential basis, and that is what has taken in by the street as a weak sentiment as of now. Reliance Industries also one of the sharp fall for this particular big boy, nearly 4.5% decline. No major news flow, but still, this index heavyweight is seeing a bit of a correction as of now. ITC also, you can see with about 2% decline, we did have a fresh downgrade that came in by Macquarie on the sharp cigarette tax hike that could hamper the volumes going ahead, which is why you can see ITC also seeing a little bit of a setback. Kotak Mahindra Bank, HDFC Bank, some of the other losers on the Nifty 50. But yes, let's quickly get on board with the technical expert of the show to understand the last minutes of the trade and how you should be positioned. Joining me is Osho Krishan of Angel One. Osho, good afternoon. A quiet day for markets once again. But then we also have the weekly expiries. So what levels one should track now that the Nifty has breached below 26,200?
Very good afternoon, Lovisha. Firstly, thank you for inviting me at the show. Well, yes, no doubt from a trading point of view, the market has been quite lackluster considering the weekly expiry trading session and recent developments that we have seen in the equity market. But overall, still the positive setup is still intact. On the technical fronts, today's correction was majorly because of the Reliance, because that's a big boy correction of nearly 4.5% has dampened the sentiments in the market. But overall, the technical structure for Nifty remains on the positive front as it is hovering above the 20-day exponential moving average. So on a very short-term point of view, I'm expecting that till the time 26,050, 26,080 on spot levels is being held positively, then from these levels, I am expecting some rebounds in the market. On the higher end, again, 26,350, followed by 400 to be seen as the first immediate target in the short-term perspective. So overall, the view remains buy on the dips. 26,080, 26,100 will be the zone to start accumulating positions in the benchmark index, and 26,400 will be the target for short-term perspective. While for banking index, I am expecting that overall, this counter has given a very strong momentum in the last few trading sessions, but still the positive traction is still intact in the counter. As we have seen ICICI Bank taking the lead in today's trading session, I'm expecting the momentum can be seen even aggravated in the coming trading session. So 60,500 to 60,600 is the immediate target for Bank Nifty, while 60,000 should be seen as a cushioning zone. So one can look for buying opportunity around 60,000 for targets of 60,600 as a BTST kind of a trade.
Okay, all right. That's the view for the Bank Nifty index as well. And of course, the index has recovered quite a bit from the day's low itself. But yes, one particular index which has been shining for the sixth consecutive day, that's your Nifty Metal Index. And several of the names like your Hindustan Copper, Hindalco, all of them hit fresh record highs in today's trading session. Osho, Nifty Metal Index, a little bit of a breather, after 2 o'clock or so, but then it still managed to recover from the day's low level. So what are you finding attractive at this particular price point for the metal basket?
See, overall metal space is still at a very strong and overbought terrain. So technically, from a risk reward point of view, at current levels, it is not very much rewarding that one should be looking for a fresh investment in metal counters. But overall, the traction is there, the momentum is there. So only for those who are already holding position in the metal space should stay invested in the counter till the time momentum persists in these counters. Majority of the counters, as you named out, Hindalco, Hind Copper, Hind Zinc, all are trading at near their lifetime high levels, and I'm expecting the momentum should be seen in the coming period also. So it is better to trail their profits on the higher end. For Hindalco, 920, 910 is a very strong support level. So keeping that as a stop loss, one should stay invested in the counter. On the higher end, 965 to 980 will be the immediate target that one can expect in the counter.
All right, Hindustan Copper 980 is the next target that we can watch out for. And of course, metal stocks have been quite resilient from the past couple of days itself. But yes, let's take a check of Nifty IT index because that index has revived after yesterday's breather. But amongst the large caps, Osho, anything that you're finding attractive? Because today we can see some buying traction coming in TCS, Wipro, HCL Tech, all of them seeing a traction of about nearly 1% or so.
There is some kind of breather that we are witnessing on the IT space, majorly into heavy space counters. But TCS on the technical front is looking lucrative at current levels. Two developments. First one is the counter is hovering above the 200-day simple moving average, and second one, there is a positive crossover of 20 and 200-day simple moving average. So these two contributes a very favorable bullish setup for the counter. So I'm expecting that in the coming period there might be a decent pullback that one can expect in TCS. Immediately 3300, 3350 will be the target, and above that one may expect the bullish momentum to get aggravated. So at current levels, one can look for buying opportunity, keeping a stop loss of nearly 3160 for a short-term point of view.
Okay, all right. 3160 can be the next stop loss for TCS from a short-term point of view. That's the cue coming in from the large cap IT names. But yes, other than the IT stocks, it's the pharma stocks which have taken the lead today, and particularly for Divi's Lab after Citi's positive note that came in for the counter. Aurobindo Pharma has done well. Lupin is also showing a little bit of a buying traction. Osho, for you, how does the charts for the pharma names look like, or anything that you're finding attractive from the current levels?
Very positive. If I have to keep it in a very nutshell, then pharma counters are looking very positive. Majority of the counters are witnessing a very strong consolidation breakout. Like Cipla is looking very positive on the technical front after a decisive consolidation for elongated period of nearly 8 weeks. The counter have emerged above the short-term moving average. So I expect that in the short-term period, Cipla can be seen as a buying opportunity from current levels. On the higher end, 1580, 1600 will be the next potential target in Cipla. Other than this counter, obviously majority of the counters are looking very positive. Fortis is also looking very positive. It has given a very strong cup and handle pattern breakout in last trading session, and I'm expecting with the kind of breakout the counter is and the momentum the counter is witnessing as of now, 1000 will be the immediate target that one can expect in Fortis also. So these two counters, one can definitely look to buy at current levels for a decent targets in the short term.
Okay, all right. Pharma stock, something to keep an eye out for in the coming sessions then. But yes, let's talk about the top Nifty loser of today. That's your trend. Right now, the stock is seeing a decline of about 8.5% following the company's third quarter business update. Now, the company did report about 17% revenue growth in the third quarter, but the revenue growth has remained steady sequentially, matching the 17% growth reported in the last quarter. However, it was lower than the pace it was seen in the last year itself. During the quarter, the company has added about 17 West Side stores and 48 Zudio stores. However, given the pace of revenue growth and the valuations of where the trend has been trading, has kept the street cautious on the counter. Osho, the stock has been a rank underperformer. What's the next support zone that investors can watch out for, and do you believe that there is further fall ahead?
See, overall, today's correction is quite disappointing for the counter because in the last two trading weeks, the counter was attempting for a rebound from the very important crucial support zone of nearly 4,000 odd levels. And in the last two trading weeks, the counter have emerged above the 50-day exponential moving average. So the sentiments were turning quite bullish. But today's session, the counter is now near about 8.5% on the downside. So I'm expecting again the correction phase has been aggravated in the counter. Again, 4,039.50 will be a crucial support zone. If it breaches below 39.50, then one need to maintain a very cautious stance and better to stay sidelines from the company. But as of now, the final stop loss for a short-term trader should be 39.50 and should stay invested if someone is already holding a position in the last two trading weeks. For those who have already taken position on the higher end, then the final stop loss will be 39.50 for them as well.
All right, 39.50 can be the next support zone for Trent as well. But yes, other than the Trent, you can see some weakness coming in for Swiggy and Eternal shares as well. Swiggy down by about nearly 5%. Eternal also down by about 1.3% as of now. But yes, this is the third straight decline for Swiggy, while for the Eternal, the loss is extended for the second day running itself. Now, the fall has also taken Swiggy shares below not just their QIP price, but also below their IPO price as well. Osho, significant lows for Swiggy and Eternal. Both of them remain under pressure. But what do the charts indicate for the near term?
Overall, Swiggy is forming a very strong short formation on the derivative front. In the last three trading session, as you mentioned, the counter was already into a corrective phase. And once it breaches the zone of 200 simple moving average, there was more of short addition that was being seen in the counter. So overall, there is a breakdown on the technical front, and I'm expecting that with the kind of breakdown the counter have witnessed, nearly 30 points from here onwards, one can expect the short-term target. So 340 to 330 will be the short-term target on the lower end for Swiggy, while Eternal, it is placed at a very strong support of 200 simple moving average. But any breakdown or any correction below the zone of 275 can aggravate fresh short position in Eternal as well. So one should maintain a cautious stance. If someone wants to willing a short position, then below 275, one can look for short position in Eternal as well.
Okay, all right. That's the view coming in for Eternal. But yes, another stock that remains in focus today, that is your IndusInd Bank. The stock has been up today despite a weak third quarter business update because if you look at the December quarter numbers, the loan book growth has been negative by about 13%. Deposits also has seen a decline for the December quarter. However, the deposits figure has been higher than the last September quarter itself, which is why you can see some good movement for IndusInd Bank. Osho, good buying interest in the counter, not just today, but from the past 5 days also, IndusInd Bank has seen some traction. What can we watch out next?
See, overall, the counter was turning bullish once it crossed the zone of 200 simple moving average in the month of November. But after a strong consolidation or base formation around the zone of 840, again the counter have started gaining a positive traction. So I'm expecting that from a very short-term point of view, 930, 935, which is the bearish gap on the daily time frame chart, that should be the short-term target for the counter. And a decisive breakthrough above 935 can only provide some strong momentum in the coming period. But for now, the trading range has been changed from the zone of 880 as a support levels and 935 as a resistance levels. So one should try to accumulate on any dips towards the zone of 900 to 880 and try to book profits around the zone of 935 from a short-term point of view.
All right, and 935, that is the major resistance zones that's coming in for IndusInd Bank. All right, apart from IndusInd Bank, it's your Axis Bank in focus, and the company also reported its third quarter, provisional figures where the gross advances have been up by about 14% on a year-on-year basis. Sequentially, also it has been up by about 4%. Deposits have been also growing strongly in double digits. Now, Nomura has given out a buy call on the counter and saying that the company is on the right growth trajectory, and they said that the management continues to guide about for 300 to 400 basis points above industry growth in a steady state. However, they've noted that the execution on deposits could remain critical to sustaining this outperformance for Axis Bank. Osho, if you look at the stock, 0.5% gains right now. The stock has hit 18-month high. Do you think that the trend could sustain going ahead?
See, overall, the broader structure is quite positive for Axis Bank, although the zone of nearly 1300, 1320 has provided some kind of rejection in the historical period. So I expect that 1310 will be a crucial hurdle for the counter. If it breaches the zone of 1300, 1310 on a decisive manner, then we can see some kind of a strong momentum coming back in Axis Bank. But from a broader term time frame, one should stay invested. The counter has formed a kind of a flat pattern on a weekly time frame chart. So any breakout or any sustenance above 1300 can provide very strong momentum buying in the counter. So one should stay invested in the counter and even can add positions once it breaches the zone of 1300 on a decisive manner.
All right, 1300 on a decisive manner it's supposed to breach as of now. That's the cue coming in for Axis Bank. But yes, let's move on and talk about Dabur. The stock has been quite flat today, but the company did say that their consolidated revenue is expected to grow in mid-single digits with operating profit and PAT to grow ahead of the revenue. They also expect their international business to post near a double-digit growth in rupee terms. And within India, they expect the home and personal care business to grow in double-digit on a strong growth in hair oils and oral care category. Osho, if you look at the stock, it's flat today, 0.2% decline, but the stock has seen some buying interest in the past 5 days. So what does the near-term hold for Dabur?
See, overall, the technical view is quite positive for the counter, although there has been some kind of volatility in the last two trading sessions. The counter have seen a buying traction. Again, there was a kind of correction in the early trading session, but from there onwards, we have seen a very smart recovery. So overall, the technical setup is very positive, and I'm expecting that from here onwards, another 40 points of rally can be seen. So 560 should be the immediate target that one can expect in Dabur, while on the lower end, 510 to 505 is a very strong support zone. It is having a strong cluster of moving average, so I'm expecting that dip should be augured well. Any dip towards 510 should be seen as a buying opportunity, and the short-term target should be around the zone of 550, followed by 560 from a short-term point of view.
Okay, all right. That's the view coming in for Dabur. We'll watch out how the stock behaves in the upcoming session. But yes, the next stock in focus is your L&T Finance. The stock is clearly off from the day's high levels. Nearly 3% decline coming in for L&T Finance from the day's high level itself. But the company did report its retail disbursements figure, which has soared by about 50% in the third quarter business update. And the retail loan book has grown by about 21% on a year-on-year basis. Osho, what can we watch out next? Because the stock today also has hit record highs, but of course, it's off from the day's high level.
See, overall, the technical structure is still positive, and I'm expecting that overall, looking at the recent development or the recent consolidation breakout, the higher target is around the zone of 335, 338 kind of zone. So one should stay intact with their long position. 335, 38 should be the immediate or short-term target. No doubt there might be some kind of profit booking because there has been a very strong vertical rally in the counter, but any dip towards the zone of 310 to 306 should be auguring well for the buyers and could be seen as a buying opportunity. And one should stay invested for the higher targets of 335 to 338 from a short to medium term point of view.
All right, that's the view coming in for L&T Finance. But yes, with that, let's quickly move on to our next stock in focus. That's your MOIL. The stock has been, trading with about 3% gains, and the company has delivered its best ever production performance in FY26 so far, and recording a record manganese ore output both in the third quarter and over the first 9 months of the financial year itself. Osho, the stock has done not only just well today, but in the past 1 month, the stock is up by about 20%. So what can we watch out next? Can we expect some reversal, some consolidation, or is there more gains to be seen for oil?
See, overall, there is a very broad consolidation that Moyle is into. On the lower end, 320 is a very strong support levels. On the higher end, 400 is a very strong resistance. So in the last two times, the zone of 400 has seen some kind of rejection in the historical period. So I'm expecting that 400 will be the short-term target that one can expect. And if there will be any further breakthrough above the zone of 400, then only one can look for aggressively buying opportunity in the counter. 480 will be the next potential target that one can expect in the medium term perspective. But from a shorter term perspective, one should stay intact with long positions. 400 should be the target, and 345 should be the short term stop loss for short term traders.
Okay, all right. That's the view coming in from oil. 3.5% gains coming in from there itself. But yes, moving on to another buzzing stock of the day. That's your Cupid. The stock has gained nearly 11% today, and it has done well for the second consecutive day, given that the company has projected the third quarter as its best performing quarter till date, achieving its highest ever order book as well. Now, the company has also revised its FY26 revenue guidance upwards to about 335 crore rupees, and PAT has been revised to about 100 crore rupees, surpassing earlier estimates. Now, the firm has also advanced its Saudi FMCG manufacturing facility and has targeted that it will be completing by March 2027. Osho, the stock has seen quite a phenomenal run from the past 2 days. So, is the stock poised for further gains going ahead?
Technically, the counter is into a very strong up movement, although starting of the week or on the 2nd January, we have seen a very steep correction in the counter. But again, in the last two trading sessions, there has been a strong recovery or a smart recovery from the technical support of 50-day exponential moving average. So I'm expecting, looking at the trend, there could be some kind of further momentum that can be seen in the counter, but only for those who are holding position, it will be advisable to trail profits on the higher end. 400 will be the support level, so that should be seen as a stop loss. While on the higher end, 460 to 475 should be seen as the next immediate target from a very short-term point of view.
All right, that's the view coming in for Cupid as well. All right, let's move on and talk about Amber Enterprises, given that it did well today, but right now it's still trading with about a flat but with a negative bias. Yesterday we did see that the company has received about its subsidiaries had received about formal approval under the electronics components manufacturing. But yes, Osho, how are you positioned here for Amber Enterprises? Yesterday it was a good move. Today the stock is seeing a little bit of a setback.
Not very much bullish on the technical front because the counter have seen multiple negative crossovers among the short-term moving average. So I'm expecting that until it breaches the zone of 7,100 on a decisive manner, till that time better to stay sidelines from the company. If there will be any breakthrough above 7,100, then only we can see some kind of buying traction coming back in the counter.
All right, that's the cue from the Amber Enterprises. But yes, the last rates coming on your screen where Nifty has closed well below that 26,200 mark. Yesterday we slipped below 26,250 and today we have slipped below that 26,200 as well. So yes, nearly 0.3% decline coming in for the benchmark index on the day of the expiry. 76 points decline for a Nifty 50 index. Sensex also seeing a decline of about nearly 400 points, nearly 0.5% cut coming in for the benchmark index. But yes, Bank Nifty has closed well in the green, given that there was some good positive provisional update figures that came in from Axis Bank and Kotak Mahindra Bank, which kept Bank Nifty in the green as of now. But yes, till yesterday we did see some broader end of the markets participating and contributing to the Nifty's up move. But today you can see that both the Nifty mid cap as well as the Nifty small cap index has ended and settled in the negative territory. But yes, other than that, if you can see other sectoral indices, Nifty metal index has settled in the green, up for the 6th consecutive day, 0.3% gains coming in for there. Nifty pharma index, earlier we were discussing with Osho as well, where he has maintained that the pharma stocks look quite strong on a technical level from a near-term perspective. Nearly 2% gains coming in from the pharma index. Nifty Realty, however, has slipped, settled with about nearly 0.4% decline. Nifty FMCG, however, is in the green with about 0.3% gain. On the other hand, if you look at Nifty Auto Index, that has also showcased a little bit of a traction, but marginally higher, settled flat, but with a positive bias. But yes, let's talk about one particular stock which has not been doing well from the past two consecutive sessions. That is your HDFC Bank, on the back of its elevated LDR ratios, and that is what has kept the street cautious on this particular counter. But yes, Osho, coming to you on the price point level and of course from a chart level as well for HDFC Bank, what does the near term indicate, given that the street has been cautious after its third quarter business update?
See, overall, on the technical development, the counter have seen a breakdown below the 200-day simple moving average after a very long period of time. Lastly, it was hovering around the zone of, last time it was hovering around the zone of 200-day simple moving average was in the March 2025, and from there onwards, it has always been on the higher trajectory. But today's, with a bearish gap, the counter have plunged below the 200-day simple moving average, so that might be a concerning factor on the technical front. The next immediate support that one can expect in HDFC Bank is placed around the zone of 940. So that should be the zone where one should try to accumulate or start accumulating in a staggered manner from a medium-term point of view. But for now, it's better to stay sidelines from HDFC and wait for some stability in the coming future.
All right, remain on a wait and watch mode for HDFC Bank. That's the cue. But yes, let's talk about Hindustan Zinc, because that stock has done quite well today, given the silver prices has jumped amid the geopolitical uncertainties. And even for the fact for silver ETFs, that has also surged, mirroring the sharp rise in the precious metals and the industrial metal. Osho, what's your take here? Hindustan Zinc done well today, 2% gains.
Overall, yes, no doubt the counter is into a very strong positive trajectory. It is technically also it is at a very strong overbought terrain. So from a fresh, again, the risk reward point of view, it's not recommended to start accumulating at current levels. On the higher end, 650-55 is a very strong and historical resistance level for the counter. So better to trail profits on the higher end. As of now, 615 is a advisable stop loss, and trail profits till the momentum exists in the counter. 655 will be the next potential target that one can expect in the short term period.
All right, that's the view coming in for Hindustan Zinc. Let's talk about Utkarsh Small Finance Bank as well, and let's see, pull up the charts and see how the stock is done today, given that it also reported its Q3 provisional figures, where the loan book has declined by about 4%, but on the flip side, deposits have seen a good traction by about 4.5% from last year, and even for its X-bucket collection efficiency has also improved to about 99% in the third quarter itself. But yes, the stock is up by about 1.4%. Coming to you, Osho, Utkarsh Small Finance Bank, how does the chart indicate for the near term?
See, overall, it's a penny counter below 20 rupees kind of a stock, which won't be having much of technical significance in these counters. But overall, it is below the 200-day simple moving average. So I will be waiting for the 200-day simple moving average to get breach on the higher end. Then only one can look for accumulation purpose in the counter. For now, it's better to stay sidelines. On the higher end, 18.60 is a resistance levels. On the lower end, the support is placed around the zone of 14 to 13.80. So that should be the support levels, and 18.5 will be the next potential target, the resistance that one can expect in short term period.
All right, that's the view coming in for Utkarsh Small Finance Bank. But yes, this the one of the top Nifty 50 losers today has been Reliance Industries. The stock has declined by about 4%, and it has contributed to one of the Nifty's down move itself. Coming to you, Osho, of course, no major news flow which led to the decline in this big boy. But still, what does the near-term chart indicate for Reliance Industries?
Today's volatility was basically because of the news on the crude oil import from the Russia in the Jamnagar factory. So I'm expecting that, because of which the counter have seen some kind of plunge in today's trading session. But technically 1480, 1470 should be seen as the cushioning zone. So one should again wait for Reliance also to get some stability around the levels of 1480. If it stabilizes, then one should look for buying opportunity in the counter. But from a positional point of view, 1430 is a very strong support levels, and I am expecting that levels will not be breached in the coming period. So one should start accumulating around the levels of 1480. followed by 1430 from a medium to long-term perspective.
Okay, all right. That's the view coming in for Reliance Industries, and as a result of which we could see an overall fall in the markets itself. But yes, Osho, just one last question before we let you go. What are your top picks as we enter the new year? Anything that you are liking as at this point of time?
From a short-term point of view, from a trading point of view, there are two counters which are in my radar. First one is HDFC Life. There has been very strong traction in this counter. The counter have now seen a sloping trend line breakout. So I'm expecting the momentum can be further continued in this counter from a short term, even from a medium term point of view. From a very short term point of view, I'm expecting a target of nearly 820, while 740 should be seen as the support levels or a stop loss zone. And once it breaches the zone of 820, then from there onwards, we can see a rally towards 880 followed by 900 from a medium term point of view. The other counter, which is looking positive from a short term, even from medium term point of view, is PPL Pharma, Piramal Pharma. This counter has seen a kind of a decisive correction, and in the recent period, the counter is forming a double bottom formation for itself on the daily time frame chart. So I'm expecting that in the short term point of view, one can look for accumulation in this counter. 188 to 192 will be the first target that one can expect. While once it breaches the zone of 192, then we can expect a target of another 20 points on the higher end. So 210, 215 will be the next potential target. While on the lower end, 174 should be seen as a trader's point of view stop loss, and 170 is a positional stop loss for the counter.
All right, those are the stocks that we need to watch out for. But with that, we have to let you go. Osho, thank you so much for joining and connecting with us.
Thank you so much.
All right, it has been once again a disappointing day for the markets. Markets through and through has suffered a decline, and with that, Nifty has suffered a decline for the second consecutive day. Of course, the expiry-related volatility has also weighed in on the benchmark index, and as a result of which, Nifty has also slipped below that 26,200 odd levels as of now. But yes, Sensex also seen a decline of about nearly 400 points, and the market breadth clearly with advanced decline ratio at 1:2 has clearly seen that the declines have taken an upper hand as of now. But yes, from the broader end of the markets, if you look at Nifty small cap index, that has sulked particularly in the trade. 0.2% decline that came in from the small cap index itself. Of course, after 3 days of consecutive gains, 2 days of consecutive gains, small cap index has seen a little bit of a breather, and the mid cap index continues to lose for the second consecutive day. So yes, that is coming in from the broader end of the markets, and from a sectoral perspective, it was the Nifty Pharma index that has cruised through the day after a positive report that came in on Divi's lab, which was cited by the city as well. Other than the Nifty Pharma index, Nifty Metal has also done quite well. Nearly 0.3% the gains coming in for the metal basket, and the metal basket is up for the 6th consecutive day. Other than that, you can see Nifty Realty, however, has sulked in the trade, settled with about 0.3% decline. Auto index also, however, has marginally settled in the green. But yes, to talk more about the markets and broadly where we are headed, let's quickly get on board with Radha Raman, Managing Director and CEO of Swyom Advisors, to understand how the market sentiment looks like. Radha, good afternoon. Wishing you a very happy new year. But a quiet day for markets once again, and looks like we're consolidating on a higher level. So do you believe that the Q3 results can be the next trigger that the markets are awaiting for? And can it indeed improve the sentiment going ahead?
Yeah, thank you. I wish you a very happy new year to you and your viewers. I say the market is a bit soft today, given the geopolitical things which are happening. There were some comments from Trump, but I think eventually what we are setting up is more in terms of once we start getting the quarter results, the third quarter, and a lot of companies have reported in terms of the updates. The updates have been quite encouraging, be in terms of auto or even banking to that extent. So I think the market should start moving up in the direction probably after in terms of when you start getting the results. I think that will be the trigger in terms of moving ahead. So that will be an important thing to look at, and obviously there will be some small corrections here and there to move forward.
Okay, got it. But Radha, the small caps have trimmed some of its underperformance if you look at from the last 1 month perspective. But how are you watching it from the earnings front? Because we've seen declines from a quarterly earnings growth front back to back. So what can we watch out from here from the December quarter?
Again, small caps specifically will still maybe a challenge. I think the valuations were stretched, slowly they have come into track. But eventually you will find divergence. So effectively you will find some set of companies doing quite well where the numbers are coming back, and there will be some set of companies will still continue the drag where the earnings are not coming. So I think it will be very earning dependent. But if you look at last few days, small caps are giving a turnaround. But again, it will also depend on the quarter numbers, what they're going to look at. And obviously their P ratios have to get in line and the earnings have to come in. I think that will be very important to watch out for. And you'll find a divergence. You'll find some set of small caps moving ahead and maybe some still continue their downside.
Okay, got it. But apart from small caps, Radha, I mean, IT once again ahead of its Q3 results has brought in some nervousness. There is some belief that the contrarian playout is over. Brokerages have downgraded the certain counters because they see limited growth visibility. But how are you placed here, and what are you watching out from the December quarter?
So we are basically slightly low on IT in terms of our portfolio and the way we are looking at it. So obviously there was some positivity in terms of the rupee depreciation and maybe the contrary coming in, that trade got played out. But eventually, if you look at till the time we get a clarity in terms of what the growths are coming in, the larger orders, and a clarity from the US side. So effectively, we'll keep hearing Trump giving things on visa and a lot of things. So till the time those clarity emerge out, I think IT still will be a challenging piece. Obviously, there are some set of companies, slightly the mid-sized companies, which are giving growth, but that is getting very, very difficult. So effectively, as a pack, you should maybe start avoiding the pack right now and maybe wait for the clarity to emerge out. I think given the situation, the geopolitical thing, what is happening, and given what Trump is putting across, especially on the visa side, one should wait on the IT and maybe take a pause on that.
Okay, all right. That's the view coming in from the IT space. But yes, I mean, apart from IT, if you look at the provisional numbers of the banking space, loan growth has been robust, but deposit pace has been lagging. LDRs have come in at all-time high levels. HDFC Bank's LDR, for instance, is way above the management's guidance. So at what point do you believe that this becomes a margin or even a liquidity risk for banks?
See, let me tell you, I think banks will manage their capital well. The CASA thing is coming down. That's something which is happening across both public sector and private sector. I think banks need to manage that, and say I think they will manage that ALM mismatch to an extent. So the whole idea piece will be more in terms of are they able to keep the deposit growth in line with the loan growth. So most of them have reported a higher loan growth and they are struggling on the deposit side. I think they have taken measures, but at the same time, that risk stands, and I think they have to figure out maybe a capital base to maybe reduce that risk. So I think that will be a challenging environment. But at the same time, they'll figure out a way in terms of maybe making sure that this LDR risk does not hinder too much in terms of their growth. And the good part is the growth is coming and the asset quality is improving. So I think that's a good sign what we look at in terms of banking. And by and large, across, if you look at private sector, public sector, they have got a good growth. And the risk margin, obviously, they need to handle, and which I think banks are geared to move forward on that.
Okay. What about the microfinance space? Because the collections have improved there, but does this signal the worst behind for the asset quality in the unsecured segment?
So I think obviously they are showing signs of improvement, but not to an extent where we can call that the base is done. And I think one quarter more is what I look at in terms of once we start getting those signs. So it is not that things are not improving, but at the same time, it is not to a base where we can say the worst is over. So I think one more quarter in terms of microfinance, but at least it started showing signs of improvement. So it's not falling further. So that's a good sign to look at. But I think to take a final call, we need to wait maybe a quarter more on that to that extent.
Okay. And how does it make you place on the insurance space? Because we did see that the GST exemption has boosted some of the policy sales, but the margins still remain under pressure because of the input tax credit laws. Do you believe that that could be offset by the policy, premium sales which has been happening in the insurance space?
I think let's break the problem in two parts. One is about immediate benefit for the customer. So I think with the GST exemption coming in, this actually boosts the whole industry. Overall, the volumes in the long term will go up. So in short term, obviously there's a margin pressure on the insurance companies because they are not able to absorb their whole input tax credit. And given that scenario, obviously there will be a short term pressure, but in a medium to long term, that gets sorted. Plus the volume increase also will help the companies. So eventually, if you look at maybe a quarter or two, they will be hit on the margins to an extent. But in the longer term, medium term, it will get sorted, and I think they'll get back to a healthy margin because the market will expand. And eventually, in long run, that will follow. So effectively, it will be good for the economy, good for the insurance companies, and typically maybe a short-term period they might lose out on the margins, but that's I think is one in the interest of a larger expansion of the base that itself is useful. So I think it will be a very short-term move, maybe a quarter or two max in terms of getting back to the margins what they would like to operate at.
Okay, got it. But yes, apart from BFSI and IT, anything that you're watching out for in the December quarter for you, Radha?
Yeah, so effectively, if I look at auto has given a very good sign. Primarily, if I look at the passenger vehicles, if I look at companies like Mahindra, and they have given extraordinary numbers. The growths have been quite good. They've been very consistent. So if I look at that, is a sector where one should look at. And maybe even with auto, we should also look at the whole two-wheeler space, the whole auto ancillary pack. So I think that's something quite interesting to look out for in terms of quarter three. And only in quarter three, I think with the GST cut coming in, which boosted the sector, we expect the demand to continue. And I think that piece should also do quite well going forward.
Okay, got it. What about metals, Radha? Because I mean, today also we are seeing that it's the 60 consecutive gains for the Nifty Metal Index, and there has been a reinstatement of the steel safeguard duty. So, what does it indicate going ahead, and how are you positioned there?
So, metal, if I look at the two packs, one is the ferrous and non-ferrous, I think non-ferrous have been doing quite well, and that thing should continue. I think most of the stocks in that space should still be under, I would say, great progress coming in. But if I look at ferrous metal also to catch up, I think overall steel should also do well over a period of time. So that I think metal should be a good pack to get into and in fact make benefit out of it. So effectively non-ferrous will be far more active as more compared to ferrous. So if I look at metals between the two, non-ferrous will be more active. Primarily your zinc, silver, copper. I think that's a pace which we are going to continue moving forward.
Okay, got it. That's the view coming in for there. But what about the FMCG space? I mean, we did see in the last quarter that there was some GST disruption. But do you see volumes to be restoring it on a normalized levels in the December quarter? Or what are you watching out for? Or do you believe that the valuations are still at quite an elevated levels, and that could, remain under? I mean, that would warrant investors' attention at this point of time.
So let me tell you, I think let me break this into two parts. One is about what is the impact of GST on the FMCG pack. I think there's a good positive thing. The demand is getting generated. In fact, with the push coming in, volumes will keep moving up. So that's a big advantage because finally for the customer, the cost is going down. But the challenge are two aspects here. One is in terms of how those companies are going to move in terms of their profitability, because there is some bit of thing on the profitability. Third thing comes in the valuation. I think the valuation in the sector is quite stretched, and most of the companies operate at a higher band currently. And I think overall, till the time we see a consistent volume increase, to get a valuation in that price is going to be challenging. So effectively, my sense is that maybe there's not too much room in terms of FMCG stocks to make money from a valuation perspective. Let the consistent volume growth coming, and then only we can take a call on that.
Okay, got it. But rather in overall sense, we have seen that the geopolitical tensions has been on the rise. If you look at the West, the US Venezuelan crisis has been on the rise. But what are you watching out next? Something that investors should keenly watch out for as a risk radar for the markets going ahead?
So I think we've been talking about along the US-India deal happening. That is something which we should keep a radar on. And frankly, you will keep seeing those geopolitical things because US being around and the policies, what they are executing. I think we'll keep seeing those kind of strings, and overall you'll have multiple, I would say, challenges. But at the same time, I would like that key things primarily will be maybe India-US deal. I think that can set the tone for the market. And obviously within the country, if I look at, the more important thing is how the results are coming in, how the earnings are getting set in. I think that is something which is very important from a market point of view. I think earnings should set the tone, and the market will absorb those geopolitical tensions by and large. I don't think that will be a major challenge. The only thing market should look up is more in terms of the US-India deal. That's very important. It's more sentimental than more in the number point of view, but that will actually set the tone and in fact have an impact on the rupee-dollar equation as well.
Okay, got it. All right, so the US-India trade deal is something that you're watching out for. All right, on that note, we have to let you go, Radha, but thank you so much for joining and connecting with us.
Thank you so much. Yeah, bye-bye.
All right, that's all we have for this edition of Closing Bell. Of course, the markets have been down for the second consecutive day. We'll watch out how the Nifty behaves in tomorrow's trading session. But for now, it's a wrap from me. Thank you for watching.